Hello, my name is Kevin Ortiz Santos, and I'm going to present you the solution to the problem setup report from for machine learning. Regarding our problem setup, Capital Analyst, a leading Mexican investment company and firm, is trading in platforms and of brokerage accounts for investments in Mexico and the US, as they use international quotation system in the Mexican Stock Exchange. The company currently employs machine learning tools for efficient portfolio search and analysis. Capital analyst strategies include leveraging market anomalies, for example, backtesting and insights from behavioral markets. This innovative approach positions the firm at the forefront of the investment advisory landscape in whole Mexico. To create the solution, we selected a group of 5 different stock and we did different analysis to create machine learning algorithms to optimize our models for portfolio investing. First of all, we're going to start with a regression analysis, rich lasso, support vector machine, decision trees, random forest, and finally my conclusion. First of all, we need to understand the correlations of our dependent variables with the independent variables. As we can see here, we chose British Petroleum stock, BP, and Chevron, which is CBX, and we selected different independent variables, in this case an ETF of oil and gas, the US 10-year Treasury bill, um, and the Standard & Poor's ETF and the dollar. As we can see in the different correlation maps, we can see that almost all our variables have a strong relationship with the ETF IEO, which stands for iShares of oil and gas in the United States. And of course, we have a smaller correlation, or not that relevant, from West Texas, from the West Texas Petroleum. As you can see, we also have here Valero, which is another company that operates with petroleum, and as you can see, the strongest correlation is between our stock and the iShares ETF. First of all, we created a regression analysis. We conducted the standard regression analysis on Chevron, Shell, BP, Valero, and iShares oil and gas ETF, and we examined the relationships with the stocks and the independent variables we chose, which are West Texas, the Standard & Poor's 500 ETF, and the 10-year Treasury bill of the United States. As we can see here, we have the results of our regression analysis. We have an adjusted R-squared range of 95% to 92% to 95% for almost all our variables. Here we have the example of Shell and Valero. For example, for Chevron, for ExxonMobil, we had 94%, and for Chevron, we had 92%. And finally, for BP, we had 70%, which is probably the lowest that we had so far with the regression analysis. Our second algorithm consisted of the rich lasso regression. We employed rich lasso regression to address multicollinearity and introduce regularization to the data we were analyzing. We analyzed the impact of regularization on predicting stock prices. As we can see, once we use regularization, we have our normal R-squared and using a lasso and rich regressions. And we can see that the lasso regression in most of cases is the most reliable method. We also did the support vector machine, and we utilized the support vector machine to classify stocks based on independent variables. We explored the support vector machine's ability to reveal classification patterns and trends in the stock performance. We can see here the support vector machine model with a radial basis function kernel was trained on 987 samples using 5 different predictors, preprocessed by centering and scaling. For this 100-fold cross-validation, the C parameter was optimized with the best performance observed at C equal to 1. The model maintained a sigma equal to 0.1 throughout. The model consistently achieved a high performance accuracy with an R-squared of 96%, showing an improved performance as C increased. And the values indicated an enhanced accuracy and making the support vector machine model, particularly at C equal 1, a robust predictor for the outcome variable. As for decision trees, we implemented decision trees to create a hierarchical structure for understanding key predictors in our stocks. We examined the influence of factors like the West Texas, the S&P 500 ETF, and the US 10-year yield on energy stock prices. As we have here, for example, we have the decision tree for Valero. We have the first price, which is $81, and this represents our root node. And as we advance, we have the other internal nodes. In this case, are 63 and 199, which 63 having 67% and related to the US 10-year yield bond. And we have from that we have 70 and we have 46% related to the West Texas Petroleum. And we from the other side we have the relation with our ETF. And finally we have our random forest. We analyzed random forest to leverage model to enhance predictive accuracy by aggregating outputs to multiple decision trees, and we investigated the collective impact of independent variables on the energy stock performance. In the end, we can conclude that our analysis with employing various machine learning methods on energy company stocks yielded insightful conclusions regarding the prices and the creation of portfolios. A standard regression analysis highlighted the relationships between the stocks and independent variables, and the application of the rich lasso regression proved valuable in addressing multicollinearity and other concerns regarding the stocks and the independent variables. And of course, concerns and fine-tuning predictive models. With support vector machines, we facilitated the classification of energy stocks based on the chosen independent variables, providing a nuanced perspective on potential trends regarding the stocks. And finally, decision trees offer a hierarchical structure to identify key predictors influencing the stock performance, while the random forest model enhanced predictive accuracy by aggregating information from multiple decision trees. Collectively, these analyses contributed to a comprehensive understanding of the dynamics influencing energy stock prices and empowering investors with valuable insights for informed decision making.